Yes, executive students, very good morning to all of you. Those who are preparing for June exam, I wanted to give you some important topics. I already uh, recorded one video regarding important questions, important concepts that are supposed to be read or studied by every student who's writing in June. Okay, so I just want to tell you how to approach a concept. So I just have taken one example from capital markets textbook, like sweat equity shares. So based on this, this is how exactly you have to approach every concept. So go through this, and this will help you a lot to answer the questions in the examination, because you are getting nowadays semi-practical questions, semi-case law questions. Direct theory questions are very less. Maybe 40% of the questions are direct questions. Rest of the questions are mostly uh, what? Rest of the questions are mostly semi-practical questions. All right, just go through this. I'm giving you under capital markets. May we have got one regulation called share-based employee benefits and sweat equity regulations. SBEB regulations, we simply call it as in 2021. Uh, this regulation I want to talk about something related to sweat equity. Issue of sweat equity, there's a spelling mistake. There's issue of sweat equity, all right? Okay. So what is this sweat equity? The name itself indicates employees, directors might work very hard for the growth of the company. When they work very hard for the growth of the company wanted to retain them. Company wants to retain such employees, such directors who have actually contributed a lot for the company. And this will definitely enhance productivity if you could take care of them. So therefore, instead of just increasing the salary, another option most of the companies usually choose is giving them stock options. Whether they're interested or not interested, that's a different story, but we are not giving them for free. So they must have contributed something, and we estimate the value of that contribution equivalent to the value of that contribution. Company, especially the listed company or unlisted company, also can issue, but these regulations are related to listed company only. So company may issue sweat equity to employees and directors as specified for their contribution to the company. So giving stock options 100%, we will be able to retain the employee, and employees will be encouraged to contribute more for the growth of the organization. That is the plan here. So in your regulations, basically, if you see what is a sweat equity, first point, just go according to this material. First point, if in case you want this material, those who are watching who are not BRIC students, please do call on our numbers. We will help you. We will send you the details. That's not an issue. Don't worry, right? Okay, so these are issued by company. These are issued by company. First of all, this point clearly says to directors and employees at a discount. In the sense of the face value is 100 rupees, we might give some discount. And for consideration other than cash, in the sense we are not accepting any cash from them. Instead of cash, whatever contribution that they have done to the company, we will estimate the value of such contribution with the help of registered valuer. Then we will allot shares. So what is that contribution? Maybe technical know-how, maybe intellectual property rights like copyright, trademark, so on and so forth, then value addition. So technical knowledge and intellectual property rights such as copyright, trademark, etc., and value addition equivalent to that, we will give them. So there are 2 points here basically. So the directors, employees, both are eligible, no doubt about it. But their contributions shall be in the form of any of these three. And that contribution, we will estimate the value equivalent to the value, we will allot shares. So mostly our objective is to retain the employees who are actually contributing a lot for the company. If they're really contributing a lot for the company, we wanted to give them better benefits. Sweat equity shares enables greater employee stake. Also, employees will understand, will have a feeling that they're a part of the company. When they start feeling that they're a part of the company, 101%, there's going to be a heavy contribution, a better contribution to the company's growth. So remember, SEBI regulations 2021, share-based employee benefits, and section 54 of company law deals with issue of sweat equity shares. But however, these regulations shall apply only to listed company, unless unlisted company which has already decided to apply for listing of its securities on stock exchange. applicability. So it may not apply to listed company, unlisted company, unless and until it has decided to get its shares listed. So these regulations, share-based employee benefits regulations 2021, shall apply only to listed company, right? Definition of employee means who? So who's an employee? That means when it comes to sweat equity shares, who's basically an employee? Who's basically an employee? Number one, an employee who might be working in India or outside India. Indirectly, those employees who are working in the company, even outside the country, in Indian company branches, are also eligible for this. And similarly, the director, whether full-time or not. Only thing is, as you all know, in company law, independent directors are not eligible for sweat equity or any shares for that matter. But all other directors, whether it is full-time director or part-time director, whoever is the director other than independent directors, shall be eligible to what you call sweat equity shares. All right, quickly, this is a rapid revision. It's not a regular class. So those of you who are attending for the first time, make sure this is a revision class. I just want to tell you how to actually approach a concept. This is how you have to make a notes out of the textbook. Don't rely any material in the market. Always go through ICSI textbook and prepare a notes out of ICSI textbook. That will only help you if not related to more interest. So therefore, section 54 and these regulations 2021 shall be followed. Okay, now. So what for we issue technical know-how, intellectual property rights contribution in the form of copyright or trademark, and any value addition that has been contributed by the employee or a director to the company. Next one, maximum quantity. This is very, very important. It says in 1 year, sweat equity shall not be more than 15% of your total paid up capital. I repeat, sweat equity shares shall be issued by the company, no doubt. But in each year, how much? Only 15% of the total paid up capital. And at any point of time, it shall not be more than 25% of the total paid up capital. So each year, we shall be issuing 15%, not more than 15% of the total paid up capital. That means if your total paid up capital is 100 crores, let's say only 15 crores value you can issue. At any point of time, it shall not be more than 25%. And if in case you are a startup company, you got listed on Innovators Growth. The IGP is basically a platform meant for startup companies. So if you are a startup company, you got listed on IGP, that is Innovators Growth Platform, you may issue, that means such company may issue sweat equity more than 15%, but maximum 50% only. That means 15% to almost 50% they can issue from the year. That means if in case startup company has been incorporated this year, so maximum it can issue for 10 years up to how much? 50%. So startup companies which are listed on Innovators Growth Platform can issue sweat equity shares up to 50%, of the total share paid up capital. All right. That means normal companies 15% to 25%, whereas startup company 15% to 50%, at least for how many years I said? 10 years from the date of incorporation. All right. Now, next comes is special resolution. So since you are issuing sweat equity shares, being a listed company, you must pass special resolution. You must pass what? Special resolution. And in that special resolution, according to Company Law Section 102, when you are sending a notice to pass such resolution, you must attach an explanatory statement. In that explanatory statement, you have to provide all the details related to sweat equity. That is this one. And if in case promoters are there, these promoters are not supposed to participate in such resolution, and they should be voted. That means each issue of sweat equity. That means suppose in a year, let's say one particular point in time, you have issued only 2% of sweat equity shares out of paid up capital, and again after 2 months, if you want to issue another 2 or 3% or 5%. Then you have to pass separate resolution. Indirectly, in 1 year, maximum sweat equity, you can issue 15%. But however, each issue has to be approved by separate resolution. That is the meaning. And once the resolution is passed, it is valid only for 1 year. That means from the date you have passed the resolution, the sweat equity can be issued within 1 year. If in case you fail to issue sweat equity from the date of resolution within 12 months, you may have to pass another resolution. The point here, next, pricing of sweat equity. So how price will be decided? It says it shall be determined in accordance with the pricing requirements for preferential issue. So whatever pricing guidelines that you did follow with respect to preferential issue. Preferential issue is basically what? The shares are issued to a selected group of people as a part of private placement, right? Selected group of people. Whatever price guidelines that you followed, whatever price guidelines that you followed for preferential allotment, the same price guidelines you have to follow when it comes to issue of sweat equity. However, the price guidelines of the qualified institutional buyers may not be followed here. The next important thing is here employee is contributing three things. Number one, he's giving you technical knowledge, he's giving you value addition, he's giving you intellectual property rights. So these three are supposed to be valued by registered valuer. And that registered valuer here is merchant banker. Yes, so merchant banker may consult experts regarding this. Okay, and also merchant banker will obtain a certificate from a chartered accountant in practice, saying that the valuation procedure, everything is what you call it, according to accounting standards. Indirectly, what it says: who will estimate the value of sweat equity contribution when employees, directors have contributed? Merchant banker. Merchant banker can approach experts, and merchant banker has to take a certificate from a chartered accountant stating that the valuation of this contribution of employee in the form of these three is according to accounting standards. Accounting treatment. Then it says where the sweat equity shares are issued for non-cash consideration. Obviously, for non-cash only, we are issuing the following treatment in the books of accounts. First one, it says if in case whatever contribution that employee has made, is subject to depreciation or amortization, then that shall be carried to balance sheet. You know what is the balance sheet according to accounting standards? You have to carry it to balance sheet. You know balance sheet, right? Okay, very good, because you have accountancy paper in group 1 4th paper. Where the above clause is not applicable, that means if the contribution of the employee is not subject to depreciation, is not subject to any amortization. Amortization is basically for intangible assets, decrease in the value. Normal assets, anyway, depreciation, that is decrease in the value, right? If in case it is not subject to depreciation, then whatever shares that you have allotted to employee shall be treated as expenses in relevant accounting standards. What my point? Yes. Placing of auditor certificate before annual general meeting. Placing of auditor certificate before annual general meeting. So board of directors have to present an auditor certificate that everything is according to regulations. Then next one, whatever sweat equity that company has given to employees and director, that shall be treated as a part of managerial salary, because we have studied in 196, 197 the limitations of managerial salary. You remember, I think maximum remuneration that is to be given for all the directors shall not be more than 11% of the net profit of the company, right? So those restrictions, subject to those restrictions, will apply here. Next, lock-in period. Lock-in period in sweat activity is not mentioned in the regulations, but it may be according to the guidelines specified by SEBI. Listing. And company may list the securities which are issued to employees, directors in the form of sweat equity in the stock exchange. All right. So these are the guidelines. It's a simple concept, you see. So you just have to make important points out of every concept. You must have already studied. I'm not saying you did not study. You must have already studied. I'm just giving you an idea how to actually remember last few days. These 5 days are very, very crucial for you. Make sure you spend 10 to 12 hours on studies only. Whatever important questions for the subjects wise I will share, make sure you watch and you read and be confident you will write properly. So always write what you understood, write what you have studied. Do not try to memorize anything. If you try to memorize anything, you will not be able to make it in this examination. All the very best. Stay tuned for the next video. Subscribe this channel. Thank you so much. Bye.